Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, May 9th, and we'll see how things look for Monday, May 12th. Going over a summary of what happened on Friday, the S&P 500 closed out the week on a quiet note, reflecting a lack of conviction among investors. The S&P 500 ended the day slightly negative, down 0.07% on well below average trading volume, a continuation of the subdued activity we've seen recently. After a higher open fueled by optimistic S&P futures, prices dipped below the daily pivot at 56.73, found support at 56.50, and oscillated between these levels before finishing virtually unchanged. Looking at the trends, the short and intermediate term outlooks remain positive, with the market holding above the 20-period and 50-period moving averages. However, the long-term picture is less rosy as we remain in a downtrend below the 200-day moving average. Volume continues to disappoint, staying below average even on down days, signaling uncertainty and a lack of clear direction. Turning to sentiment and technical indicators, the VIX, our gauge of market volatility, dropped to 21.9 but remains above 20, suggesting lingering unease. Short-term technical indicators such as the Stochastic RSI, Williams %R, CCI indicators, and stochastics are positive but mixed, with some cooling from recent extreme readings. The intermediate-term TTM squeeze indicator is extremely positive but showing signs of turning negative. Meanwhile, the smart money indicators, which include accumulation distribution, Chaiken money flow, and Chaiken oscillator, are flashing signs of weakness. Sector performance was uneven. Energy led the pack, while healthcare and communication lagged. Defensive sectors such as staples and growth areas such as tech and discretionary underperformed, reflecting cautious positioning. Key levels to note. The SPY, or the ETF for the S&P 500, hit resistance at the 200-day moving average on Thursday and failed to close above 5,700 for the S&P index. Support at 56.50 held firm, and the weekly close at 56.60 landed above the weekly pivot at 55.75, a longer-term positive sign. Checking out the market context and influences, the dominant story heading into the weekend is the U.S.-China trade talks in Switzerland. Investors are laser-focused on the potential de-escalation of tariffs, currently at 145% for the U.S., and 125% for China. There's speculation about a U.S. tariff reduction to 60% or lower, though President Trump suggested 80% on Truth Social. The markets are craving tangible progress, not just promises of future meetings, and the outcome will help set the tone for Monday's session. On the economic front, recent jobless claims, which came out on Thursday, show stability, with initial claims steady and continuing claims range-bound. The unemployment rate, which came out a week ago, remains at 4.2%. Interest rates edged up on Friday, with the 10-year yield at 4.38%, up from 4.37% on Thursday. The yield curve for the 10-year to 3-month is no longer inverted, but it is borderline, a dynamic worth watching. Earnings growth for the first quarter slowed but stayed positive in double digits, though forward projections are less optimistic, with pressure on earnings per share noted by Deutsche Bank. The S&P 500's PE ratio remains elevated for megacaps, but is closer to fair value for the broader index. Market breadth, including the advanced decline lines and bullish percent indexes, remain positive, though short-term overbought conditions exist. Switching to the technical outlook. The market is in a non-trending phase, with both the short and intermediate term ADX, or average directional movement indicators, readings below 20, suggesting sideways strategies may be optimal until a breakout occurs. Resistance looms at the 61.8% Fibonacci retracement level from the April 2024 low to the February 2025 high, alongside the 100-day exponential moving average and the Ichimoku cloud. Support remains solid above the weekly chart at 55.75 and the daily chart at the 50-period simple moving average. Momentum is mixed but leans positive in the short term, though extreme readings in indicators such as the slope oscillator call for caution. Looking ahead to Monday, May 12th, the market's reaction to the U.S.-China trade talk outcomes will be the primary driver of sentiment. Futures trading on Sunday evening, accessible via platforms such as investing.com, will offer early clues. On the economic calendar, the Treasury budget report is due on Monday, but the heavy hitters, CPI, PPI, and retail sales, arrive later in the week. Fed Chair Powell's speech on Thursday will also loom large. Seasonally, options expiration week introduces volatility, with a slight negative bias as the markets close lower 53% of the time historically. Post-election year seasonality also tilts negative in the short term. The bias for Monday is cautiously positive in the short and intermediate term, but the long-term downtrend and trade talk uncertainty are keeping the markets on edge. A disappointing trade talk outcome could trigger a sharp negative reaction. Traders should monitor key pivot points for Monday, R2, R1, the pivot point, S1, and S2, which are updated daily on the YouTube community tab for this channel. In conclusion, the market is in a wait-and-see mode with low conviction and low volume, underscoring uncertainty ahead of critical U.S.-China trade talks. While short and intermediate term trends are positive, the long-term downtrend and overhead resistance at the 200-day moving average and Fibonacci levels have capped upside potential to this point. Investors should keep an eye Sunday evening on the futures and brace for volatility based on the trade talk outcomes, with upcoming economic data such as CPI and PPI also poised to influence direction. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately, or to access the daily newsletter, please click on the links below.